In today's video, you're going to learn about what breakouts are, how to spot them, and how to use them to your advantage so that you will win in trading. This can be used in stocks, Bitcoin, or Forex, name it. Breakouts happen in all markets. This is part 3 of our current series about support and resistance, but just a heads up, while this is the most rewarding of all the strategies, this is also the trickiest and will need a lot of practice, but if handled properly, you will have the lowest risk strategy in trading up in your sleeves. Good day everyone, my name is Lloyd and welcome to Financial Freedom 101. So first up, let's define what breakout is and then see how it looks like in theory, and then let's see why it is rewarding. And then after that, as always, let's look at real market examples. Alright, so breakout occurs when a price breaks out and closes above a resistance level or below a support level. If this is your resistance level up here and this is your support level down here, a breakout happens when it does this or when the price does this. That's a breakout. So just a little review about what support and resistance is. A support is a point where prices rallies up right after reaching them. This is the line that you see here. A strong support line is when the bounce happens twice at the same point, but I suggest 3 points for a stronger indicator. Support lines can be horizontal or angled up or angled down. A resistance is the opposite of the support and acts as a ceiling where prices go down after reaching that point. This is the line that you see above. Whenever the price reaches that area, it goes down like this. And when it happens twice or 3 times, that's a strong resistance right there. This can also be horizontal or angled like this. For more detailed information about support and resistance, just click the bubble above and it should open a different tab for a video about that. So click it if you haven't seen it yet. Now the support and resistance line together forms a trading range, and breakouts happen when that range is broken either above or below. Now the supply and demand together with the market psychology forms the trading range. This is the trading range inside those levels. And breaks in these ranges signifies a change in the market psychology. When people start to see value in the stock, it becomes in demand. So when the demand goes up, and since the supply does not change, the sellers price it higher. So when the buyers buy at a high price, breakout happens. That's basically how breakout happens. Now this is a breakout. The price breaks the resistance, and when that happens, the resistance line most likely becomes our new support until a new support has been made. The resistance shifting into a new support happens because the market now sees that resistance as a new acceptable price. So let's look at the strategy and how to trade breakouts. It can be used at any time frame, but I strongly suggest doing this on daily basis as this works best on that time frame because you need to watch this while it is happening. So first, we need to find a stock or currency to trade. It has to have clearly defined support down here and resistance level up here like this one. This is so that we can anticipate a breakout. Once you find one, the next step is getting in. How do we get in a breakout? So the first and most aggressive way to get in a breakout is on an actual breakout that happens within the day. So if you're watching the market this day and if it breaks out there, you get in. This is very risky as the price could go back down below the resistance level, and usually the price will go down again. We know this because of the law of support and resistance. To protect yourself, if you choose this kind of entry, you have to set a stop loss just below the resistance level right here. Do not use this strategy if you can't watch the market full time in a day, because if it's a false breakout and goes down to support level, your buying was here, you will have a very big loss right there. But if you have a stop loss option to automatically do a stop loss, that is okay. But for markets like Philippines that does not allow stop loss, you only do this if you can watch it full time. Now the second way of getting in is for the candlestick to close out above the resistance line. So you have to wait at the end of the day if it holds out above resistance level. By definition, a breakout happens when the price closes above the resistance. So this is a proper breakout basing on that definition. So if you see the price close as a breakout today, look to be a buyer of the stock the next day. And again, set a stop loss below the previous resistance right here, as this level is now our support. Now the third and most conservative approach is where after the breakout, like this, the next day you wait for a confirmation candle. And then after that, the next day, that is where you buy in. Having the confirmation candle close above the range is the strongest indication that the breakout is confirmed. Now, I strongly suggest very high patience when planning to get in breakouts, as you have to wait for a day or up to 3 days before you can get in. The anticipation can be a burden, so patience is greatly required. Now, pick one of the 3 strategies to get in depending on your risk tolerance. I will always reiterate to have an exit strategy. Set your stop loss not too far and not too close to the resistance level so you can still be in the trade in case small fluctuations in the price happens. So now let's look at a real market, and then I'll show you how to trade using breakout. Now, so here's ALI, and let's check for the breakouts. As you can see here in this area, we have a clear line of resistance as mentioned before. If it was hit at least twice, that's a clear resistance, and this was hit twice at these points, here and here. Now you can see that there was a breakout on this day, but as you can see, it failed on that day and went back down and even became a red candlestick. If you use the first approach, you would have failed this day using that strategy. Now it doesn't always end like that. Look at the final candle. It's now poised to do a breakout again. Let's forward one candlestick here. There's a breakout, and if you use the first strategy, we would have got in the moment of the breakout and won. This time it worked, but still you lost one time before. Remember, this is why this strategy is risky. Now in this case, we would recommend the second strategy, which is what I usually do. Wait for it to close out above the resistance line for that day, and then just buy the next day, which is, if we did that, we would have still ridden the breakout, and this is a much more safer strategy. Now let's move forward a bit. Remember, we mentioned that the previous resistance becomes a support, and this shows you that it is true. This was our resistance before, and look at that. It became a support. Whenever the price reaches the line, it goes up. It reaches it again, it goes up. And when it reaches it again, it went up again. So this is a very clear example that the previous resistance becomes a support. Now, we have another clear level of resistance. Let me put a line here. This was the highest point before. It tried to go up there, but it went down again. So this is now our resistance. Now remember the first strategy. If you use that this time for our next breakout, you would have gained this much. Sometimes being aggressive is the best strategy. And if we use strategy number 2 for this, we would have bought it here because we will wait for it to close. And if we bought it at this level, we would have lost by this much. See, it went up but went down, and because of that, it became a false breakout and went to support again. This just shows you that it doesn't work all the time. This is why you should always have an exit plan. No questions about exit plans. When it tried to do another breakout, it lost momentum, and then this time did a deep dive. It caused a panic selling right there, following the previous false breakout, but the market poised itself and went back to the right trading range. Now the support holds this time if we move forward, and it's now poised again to do a breakout. So what do we do? I always recommend strategy number 2, as that is the kind of trader I am with my risk tolerance. So let's wait for the breakout. There you go. So this is a breakout. If we waited for the breakout and the close for the day, we would have gotten this candlestick, and this signals us to buy the next day. And if we did that, we would have gotten this gain. Now, it did go down a bit of the resistance line, and this is why I mentioned earlier, don't set your stop loss too close, because if you did, you would have been out of the trade and missed this gain. If we followed this strategy, this is what you could have earned for trading the breakout. The breakout was here. Let me just fast forward everything. Look at our gain for just following that strategy right there. That's how high you could have earned if you did this breakout. So this is the first video of trading breakouts. Next week, we're going to talk about false breakouts and how to handle them, how to shield yourself from those losses. This will strengthen your breakout trading strategies, so be sure to subscribe so you won't miss that out. Once again, this is Lloyd. Have a great day. Peace out.